Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. Today's income stock pick, Ramaco Resources Inc., traded on NASDAQ under symbol METC, is a great basic material stock with two tailwinds that should make even the most discriminating income investors happy. First, when it comes to high yield dividends, you want to look for companies that can sustain a lofty payout. And to gauge that, you typically look at payout ratio, a measure relative to the company's net income. For us, we can stomach a payout ratio of up to 90%, and we believe that still leaves the company with enough financial, wiggle room to cover its dividends. Ramaco Resources has a payout ratio of just 20.5%. Second, to support its dividend, there needs to be a strong demand for what the company is selling. There is really no point bragging about, how quickly you can make your dot matrix printer or floppy disk or 8-track tapes. That doesn't really matter if there is no market for it. John?
Yeah, thanks, Mo. You're right. Ramaco Resources, which is North America's only pure play metallurgical coal company, is riding a wave of record global coal demand right now. Global coal demand is set to hit a record high this year of 8.38 billion tons. That's up slightly, like 0.4% from a record 2022. Now, the demand for coal as a power source may be declining here in the US and European Union, but in Asia and particularly in China and India, they're more than making up for these declines. And that's because, coal is used for more than just heating. Metallurgical coal is a key component in the production of primary steel, which is crucial to infrastructure and the entire energy transition.
And John, as I understand correctly, there is a huge demand for steel around the world. That should put the demand for coking coal, increase the demand for coking coal as the global economy recovers from pandemic.
Yeah, exactly. Global steel output is expected to increase, I think, by 22% from 1.8 billion tons in 2022 to 2.2 billion tons in 2050. Demand for coking coal is expected to rise at an even brisker pace.
And why is that?
Well, growing demand from various sectors. Metallurgical coal is an essential ingredient, as I just mentioned it, in the production of steel, which makes it one of the most widely used and in-demand building materials on the planet. And it takes a lot of coking coal to make steel. For example, it takes nearly 1,700 pounds of metallurgical coal to make 1 ton of steel. If you're looking for a real-world example, to build an electric vehicle, you need 1,984 pounds of steel, which requires 1,521 pounds of metallurgical coal. And it also takes 285 tons of steel and 220 tons of metallurgical coal to build one single wind turbine.
So we got the backstory. I think we've told a good backstory to our readers. Now let's dig into what Ramaco Resources do. Can you explain a little bit more?
Yeah, absolutely. Ramaco Resources is one of North America's only producers of metallurgical coal. The company's development properties include 4 projects with approximately 250 million tons of metallurgical coal reserves. It's targeting production of around 6.5 million tons by 2026, and that's up significantly from just half a ton in 2017. For reference, there are 2,000 pounds in a ton. In 2026, that means Ramaco expects to produce 13 billion. The company serves blast furnace steel mills and coke plants in the United States, as well as international metallurgical coal consumers.
John, I was also reading about this, I want to call it exciting discovery that they recently made. And I wonder if it makes Ramaco Resources even a better opportunity than it was, a few months ago.
Yeah, absolutely. There's more to Ramaco than coking coal, though, with a recent rare earth element discovery juicing the company's long-term prospects. In this past May, Ramaco said that an independent analysis of its Brook mine in Wyoming discovered what could be the largest unconventional deposit of rare earth elements, or REE, in the U.S. Analysts estimate a range of between 181,000 and 226,000 tons of magnetic rare earth oxide. The mine ranks now among the highest relative concentrates just discovered of magnetic REEs or MREs. And that includes, elements such as terbium, dysprosium, as well as neodymium and praseodymium. There's currently only one active mine for MREs in the entire US, and MREs are important. The materials are used in, as we said, EVs, advanced military technologies, medical devices, and a lot more. Rare earth elements, meanwhile, are increasingly important in defense, industrial, and consumer technologies. And the outlook looks bright because recently Congress and the Department of Energy have set aside billions of dollars towards this goal. And a bipartisan bill introduced earlier this year would establish tax credits to support the production of MREs like those found at the Brooks mine in Wyoming.
After a record 2022, Ramaco Resources reported better than expected first quarter results. If you can explain a little bit what happened here financially.
Again, stronger demand, stronger results. For the first quarter, Ramaco reported that revenue was up 7% year over year and 23% sequentially at $166.4 million. Net income was up 76% sequentially at $25.3 million or 57 cents per share, while adjusted EBITDA climbed 51% to $48.3 million. And during the quarter, the company achieved record production of 834,000 tons and record sales of 757,000 tons. And despite inflationary pressures, its adjusted cash cost of sales fell from $114 per ton in the fourth quarter of 2022 to just $105 per ton in the first quarter of 2023.
And if I read correctly, I read on incomeinvestors.com that the increase in sales forced the company to increase its guidance, for sales guidance and production guidance for 2023. Is that correct?
Absolutely. For full year 2023, management increased its production guidance from 3.0 to 3.5 million tons up to 3.1 to 3.6 million tons. It also hiked its full year 2023 sales guidance to 3.3 to 3.8 million tons. That represents a 45% increase over 2022. In the just completed second quarter, which we don't know the results yet of, they're expected to increase sales modestly over first quarter 2023 levels to around 757,000 tons. But by the second half of 2023, the company expects to ramp up production and sales to a run rate of roughly 1 million tons per quarter.
And now let's talk about the fun stuff. With strong financial performance, I suspect that dividends are great here.
Yeah, well, Ramaco hasn't been paying a dividend for very long. The first payout was in early 2022 at 0.0567 cents, but it's been raising it pretty regularly since then. And in the fourth quarter of 2022, it paid out 0.1250 per quarter. And it's held that quarterly payout at 0.125 in the first quarter of 2023, which represents a year-over-year increase of 10.6%. It also represents a full-year payout of 50 cents per share for an annual yield of 5.66%, which is, roughly double the current inflation rate of 2.9%. So that big inflation-crushing dividend is only good if the company can sustain the payout. And it safely can. The payout ratio is, as you mentioned earlier, just 2.50%. This leaves the board more than enough room to raise it again in 2023 if it so chooses.
And how's METC stock price doing?
Yeah, Ramaco's shares have been edging higher, like making solid moves, up 11% over the last month, 37% over the last 3 months, and 28.5% year to date. But Wall Street expects MET common shares to climb significantly higher over the coming quarters, with a median 12-month share price target of $10 and a high estimate of $12 per share.
Let's talk about something else that I believe our viewers should know. With this new discovery of rare earth metals in Wyoming, there are now 2 ways to play Ramaco Resources. Could you explain?
Yeah, exactly. Thanks. Yeah. On June 22nd, the company launched its Class B common stock, which trades on the NASDAQ under the symbol METCB. The launch of its new common stock is tied to the rare earth mineral deposit that was recently discovered in Wyoming. Now, what's the difference? Where METC common stock represents the interests of both metallurgical coal mining and REE, the new common stock, METCB, represents an interest in the financial performance of what the company calls its core assets, which is an abbreviation of carbon ore rare earth. Now, the company said it believes that core's non-cost bearing coal royalties, coal infrastructure, re-royalties, and carbon products, IP licensing, are forms of passive income that are fundamentally different than its metallurgical coal mining operations. So it now thinks its new Class B shares will be valued similarly to those of other royalty companies, potentially increasing both total company share value and provide additional long-term capital returns. First dividend payment was discussed at the company's July board meeting, of which we are not yet privy to what it decided. So if it's going to be anything like a royalty company, the payout should be equally as impressive as the dividend payout on its common stock.
Will this now with this new stock, will it dilute the dividend on the common stock?
Well, that's a good question. And I think that's probably what some people are thinking. But the addition of METCB does not reduce the company's net income, adjust EBITDA, or impact any future dividends for holders of the Class A share, which is METC. Nor does the creation of the Class B share result in a reduction of the Class A dividend payout. The two dividend policies are treated separately, and the two dividends are not cumulative. And right now, there is no plan to change the level of current Class A dividend payout. Furthermore, management and the board expect to continue to increase the Class A dividend by at least 10% each year. So the level of Class B will grow as the income of the core assets grow over time.
Hey, John, thank you so much for talking about Ramaco Resources. Just to recap, Ramaco Resources is a great way for investors to play coal industry and rare elements. On the coal front, it has a strong growth forecast targeting production of about 6.5 million tons by 2026, up from just 0.5 million tons produced in 2017. It has been reporting strong financial results, including record 2022 net income and better than expected first quarter of 2023 results. Thanks to a strong start to the year, management raised its full year production and sales guidance. It has a strong pipeline to more than double production, and when combined with recently discovered rare earth metal deposits, Ramaco Resources has a potential to be a major U.S. supplier of critical materials for many decades to come. Since initial production began in 2017, Ramaco has consistently executed on its plan to grow production and generate a strong free cash flow, which it has distributed to its shareholders. Thanks to the introduction of a new Class B stock, METCB, investors now have two ways to take advantage of the company's reliable revenue stream and dividend payout. That's it for today. We'll be back with another video soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.